Our high gear vaccination drive has resulted in close to 100% of our colleagues having got the first dose, and I'm pleased to share with you 87% of our colleagues have also been given the second dose. So therefore, 87% of our colleagues are now fully vaccinated. On the cost front, our cost control measures have resulted in significant reduction in our OPEX, which has helped us to improve our EBITDA margins consistently. On the cash front too, we are not only a debt-free company having paid over 50 crore debt, but we have been able to generate cash surplus to the tune of 60 crore during this period. On the communities front, being a pharmaceutical company, we recommitted our faith in ensuring that our medicines are available to every needy patient. We did not shut our plants, and we made sure that every single request which came to us for life-saving medicines gets delivered at the doorstep. We also launched a Safe Senior app. We also had an initiative called Swayam Health, which provides for the paramedic training. And third, we also had the opportunity and privilege to have portable fever clinics under RPG Foundation launched in the state of Maharashtra, in the select districts of Maharashtra. On the demand front, so doctor clinics have come back to normal now, but being a specialty company, the chemotherapy and the transplants continue to be a bit lower than what they used to be at the pre-COVID level. On the supply side, our factories are running normal, but issues are around the prices of the API, RNs, PNs, etc. Now let me come to the brief highlights on our business performance. At the company level, H1 recorded healthy double-digit growth in both revenues and profit. Revenues grew at 17%, PBT grew at 51% YOY. Our profit margin record-setting trajectory continued. EBITDA margin reached 22.6%, up 330 basis points year-on-year basis, and PBT margin reached 18.9%, up by 430 basis points year-on-year basis. And you would recall that this EBITDA margin drive is going on for the last almost about 8 to 9 quarters relentlessly. All the sales hygiene parameters, whether it is sales returns, expiries, account receivables, inventory, etc., all are well entrenched in the healthy zone now. Our company, as I said, continues to be debt-free, and in the quarter gone by, we generated highest ever net cash flow, which was to the tune of 59.1 crore. All the three segments registered consistent growth in both revenue and profit. And with respect to profit, both volume and margin. On domestic formulation front, which makes up about 2/3 of our business, revenues grew at 21%, which is significantly higher than the market growth. And this performance was driven by the 5 pillars of turnaround strategy, which I have mentioned in my earlier discussions, which is 1, quickly to recap, product portfolio rejuvenation. Second, strategic brand assets building out of our legacy products and what we call as iconic textbook brands. And third was customer coverage deepening. Fourth, the sales force effectiveness enhancement and productivity enhancement. And the fifth was profitability improvement through a host of measures like manufacturing efficiencies enhancement, OPEX control, and sales hygiene improvement. All the 5 pillars I'm glad to share with you are reflecting results. Our new product contribution, which we launched over the last few quarters, have contributed 16% to domestic formulation sales. Our legacy brands are all growing at a good double-digit growth through sales, share of voice announcement, line extension launches, and even making use of digital, what we call as digital now, and expansion of our portfolio to the new customer segments. Our targeted customer coverage are between 50 to 90%, depending on the customer category. Our productivity has moved from 3.5 lakhs to 5 lakh plus now. Our EBITDA margins, as you all know, are healthy double digit. Coming to international formulations, which contributes 17% of our overall revenues, it shows a growth of 6%, and that too largely due to political unrest in one of our key markets, Myanmar. However, the rest of the business, international formulation, did demonstrate a robust, healthy double-digit growth. In the international formulation business, we continue to stay focused on building our niche portfolio immunosuppressant basket. We continue to maximize our existing and new products with some specific competitive advantage. We continue to expand our footprints in emerging markets where we have filed around over 50 registrations, and also strengthening our formulation manufacturing facility to make it the PICS approvable going forward. We have F2 plant which is already approved by EU. This is the extended part of the plant which we call as F1. This would help us to stepwise build up our global business going forward. On the API front, which contributes 18% of our overall business, we recorded a good growth of 19%. Here again, we continue to focus on our business continuity, focus on niche products, niche markets, expansion into new products, new customers, and new markets. And we have plans also to go forward in making our API plant also better. Lastly, other than the business performance in all the business segments, there are two more important areas we are working on, which are part of our transformation agenda, and these are: one, embracing digitalization across front end, back end, and support functions. A slew of initiatives have been launched therewith, and first is what we call as industry first, anytime, anywhere doctor support initiative called RPG Serve. We offer 15 services to 6 different kind of customer segments, and we have ramped up our
आपण ज्या व्यक्तीसोबत बोलत आहात त्या व्यक्तीने आपला कॉल होल्डवर ठेवला आहे. कृपया.
Please go ahead. I'm sorry for the disturbance.
Okay. I was mentioning about our digitalization initiative, and the first initiative is RPG Serve, which is anytime, anywhere doctor support initiative launched to close to 17,000 doctors. It offers 15 services under 6 different segments, and it's showing a good traction. It's the right time when digital is the need. It is helping us to increase our share of voice. Number 2, at the back end also, we have launched different digital initiatives like e-quality management system, e-document management system, and so on and so forth. And similarly, the Employee Connect, the Salesforce Connect, learning systems are all in the process of getting digitalized or they have been digitalized already. And the second point, other than digitalization, is creating a happy and performance-driven culture. We are the first group who have adopted happiness as our corporate theme, and we have a 6-point framework. We also have put in place a measurement tool so that we know what is the happiness quotient of our people. Lastly, going forward, our priorities are 100% of our employees need to get fully vaccinated, and this includes in our contract employees. Second, to maintain growth momentum in the company across the segments with the growth higher than the market, and continue to stay focused on our strategic priorities, which is: 1, focus on profitable growth, providing top focus to our domestic formulation business. They have worked relentlessly on product portfolio rejuvenation, productivity enhancement, and on the international front, our strategic priority is to build up the business in a stepwise manner by adding new products, new customers, and new markets, as well as make sure that manufacturing capabilities and capacities are also accordingly ramped up. Enhancing digitalization drive, and as I mentioned earlier, building a happy and performance culture is another important strategic priority for us. So here I stop and look forward to questions if you have for us. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the first question from the line of Rajat Srivastava from InCred AMC. Please go ahead.
Yeah, hi. Thanks for taking my question. And congrats, sir, on the good set of results. Sir, my first question is, in your opening comments, you mentioned that you've been doing some cost control measures. Can you give some more color, what are you doing there with regards to cost control?
Yeah. Thanks for the question. The cost control measures I talked about encompass one, manpower costs. We have made sure that we look at our organization structure, address span of control issues, address productivity related issues. That's one area. Second area is the manufacturing efficiency enhancement. And third area is the sales hygiene control, because that also results into leakage. And I'm happy to share with you that our expiries have come down to a significant level now, which has helped us to do reduce our costs. These are the few areas which I can mention to you.
All right. And so secondly, you have reported some 21% YOY growth in the first half of FY22. Will it be possible for you to break this into price growth, volume growth, and growth from new product launches?
Okay. Largely, the good news is that the growth has largely come from the volumes, which are 10% plus. The price growth is in the range of 4-5%, and so also the new introductions. The volume growth has come. Good news again, volume growth has come from not only the new products but the legacy products like Lomotil, Lomofin, Naproxen, Serenase, Triking. These are the legacy products which have significantly contributed to our volume growth.
All right. So what would be the contribution of immunosuppressants and biosimilars in your total domestic piece?
Yeah. The immunosuppressants, as you know, are a very important niche segment for us. Together in the company business, it accounts for 25% to our business, and it is spread across the domestic formulation, international formulation, and API. Talking about the MABs account now close to about 9% of our domestic formulation business.
All right. Okay. And so now that you've started to generate significant amount of cash, can you throw some light on what do you intend to do with this cash? Are you looking at inorganic opportunities or anything else?
Yeah. I think you said it. We are, whatever the cash is being generated now, we want to make use of that cash to improve the company business, which is, we are open to the inorganic opportunities. And as you know, that inorganic opportunities, the right kind of inorganic opportunities takes own time. We have our strategic priorities on product portfolio, what we want to develop going forward, which I have been mentioning with chronic and specialty. And so that's where we expect that we'll be able to use our cash. We also want to use this cash for investing in our plants to make them come to the best standards globally, and that's where we intend to use the cash.
Sure. Thanks for taking my question, sir, and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Aditya Khenka from InCred AMC. Please go ahead.
Yeah, thanks for the opportunity. You had a question on the manpower cost. You mentioned that you guys are doing some cost control measures there. But if I look at your manpower costs for the past 5, 6 quarters, even more than that actually, 10 quarters, your cost has been between just 23-24 crore type of range. And assuming in a market like India, the average salary increment could be about 5-6%, but not more. So are we actively reducing number of people in the organization? Because I don't see any reduction in LR force. So the reduction in the corporate overhead, just wanted to understand.
Okay. Actually, the line was not clear. I just wanted to reconfirm that you want to know about the what we are doing on the manpower optimization. Is that correct?
That's correct, yes.
Okay. So the manpower we look at manpower in 2 distinct ways. One is the manpower which is bringing in the revenues, and the other is the manpower which is more on the administration side. So what we did was that we have revisited our entire front end, which is Salesforce organization, and have made sure that we did in the course of about 8 or 9 quarters back, was that we optimized the span of control there. We had removed the certain very low productivity territories, etc. Having done, now our focus there is to ramp up the customer coverage, and therefore wherever there's a need for us to add the representatives, which we had initially low productivity at quarter we had removed, we are now using those currently to see that we are able to ramp up our business. In our business, share of voice is very important. Customer coverage is very important, which is what we are trying to do. And on the other hand, the manpower in the administrative areas are the ones which we are looking at in optimizing, which is in our plants, which is in our offices. That's where the optimization drive is currently on. So that's how we are dealing with the manpower related costs and manpower issues.
So what is the number of medical representatives you will have today in the organization?
This is a little less than 500 today.
And if I look 3 years out, where can this number be? It can be 600, 700, 800. Where do you plan to be in 3 years?
Yes. I'd like to answer the question a little differently, and that is because I don't look at the Salesforce number per se. I look at the customer coverage. The targeted therapy customers, we need to improve our coverage. And yes, there is a scope for us to improve our customer coverages there in the field of cardiology, in the field of diabetology, in the field of nephrology. We are hovering around 85% plus. But another important segment for us is consulting physicians as well as general practitioners. That's where we need to ramp up our customer coverage more. So that's how we will increase the field force, number one. Number two is, as we make certain targeted therapies like cardiovascular metabolic disorder or urology or rheumatology, we want to grow them. There again, we have to increase our customer coverage. So these are identified focus therapies. And maybe we reach the number what you're saying, but I look at from the viewpoint of customer coverage rather than increasing the field force numbers per se.
Understood, sir. On the gross margins in 2Q, we have seen actually an increase in gross margin, if I'm not mistaken. Whereas what we have been hearing in the industry is that the cost of API has gone up and, the cost of freight has gone up. So can you help us understand how the gross margins have expanded while your input costs have presumably gone up?
Yes. I think the cost of goods is a function of product mix and manufacturing efficiencies. And on the manufacturing efficiency, there is a relentless work which is going on, which is helping us now. Number two, the H1 product mix also has been pretty good. We have been able to sell profitable products in our domestic formulation business. And also, we have three business segments: domestic formulation, international formulation, and APIs. I'm happy to share with you that all the three segments now are showing improvement in the gross margins, and because of the profitable product mix, manufacturing efficiencies enhancement, etc. So yes, we are also impacted by the increased cost of solvents, packing material, aluminum foil, cartons, etc., etc. But what is helping us is the product mix and the manufacturing efficiency enhancement drive, which we have taken within our factories. That's what is helping us. So that is what has contributed towards the gross margin expansion.
That is phenomenal, sir. Congratulations and all the best.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Samad Singh from PPS Capital. Please go ahead.
Good afternoon. Thank you for the opportunity. My question is on the immunosuppressants basket that we have domestically. I think it's largely Azoran based. Could you just talk about how we look at this market and are we following up with the with either the tacrolimus or cyclosporin or any of the other sort of molecules in this basket?
Yeah. Thanks for the question. As I mentioned, immunosuppressant basket is important for us. That's a very important niche for us. And as you rightly mentioned, immunosuppressant basket covers azathioprine, mycophenolate, tacrolimus, and cyclosporin. And we have a major presence in azathioprine, where we hold close to 70% market share. And other key molecules, which you just mentioned, which is mycophenolate, tacrolimus, and cyclosporin, are relatively larger molecules in terms of the size, where our share is limited. Now, what we are trying to do is, since we have excellent customer coverage of nephrologists, we have also got into the rheumatology and select end of gastroenterology, and going forward for dermatology, because these are other three important segments who prescribe immunosuppressant basket. We want to improve our share in these all these four molecules. And since we have good equity with these customers, we have almost over 90% customer coverage of these segments, particularly nephrology. Rheumatology we are ramping up. We have picked up this as a critical basket for us. Plus, we are integrated back end to front end. We manufacture azathioprine. We also formulate azathioprine. We have got also a bit of scale there because we sell the bulk drug of API through our API business unit. We sell internationally also, and the major seller is azathioprine. So we sell this in the EU markets, Australia and Canada, and we are also selling this to the domestic formulation in the ROW markets. So put together, I think it is helping us. Our intent is now to make sure that we progress on the mycophenolate, tacrolimus, and cyclosporin, apart from the azathioprine alone.
That is good. And just one more question on sodium valproate. I think we were not being able to get up full potential revenue from this because there were some patients which trial that was still pending. So has that happened yet?
Yes, I think you recall my last conversation very well. Yes, we had launched the product in the UK market, and because of the COVID, the customers or patient switch trials had not commenced. But I'm pleased to share with you that I just had the interaction last week with the team which is marketing the product there. There is a traction happening there. Of course, not to the extent we thought pre-COVID, but it has started happening. But good news is that the patients who have taken this complex generic product, which is the prolonged release version of sodium valproate, are experiencing good levels of sodium valproate in their blood. And as we go along, hopefully this will move further. We are not only restricting to UK market, we are taking sodium valproate to other regulated markets as well. And I think there will be good traction coming. Apart from this particular product, we have yet another product on sodium valproate worked out, and that also belongs to the similar category. And we hope to get excellent mileage for this product for sodium valproate in our Australia market as well.
In Australia as well. Okay, great. And just one last question. Could you just explain to me our right to play in the MAB space? What is it that we're bringing to the table and trying to achieve it?
Okay. We all know that MABs is a category of future. Globally also the MABs have taken over 30% share. In top 25 products globally, if you see, they are all biologics or the biologic origin. So not to be in this market is not a choice now. If we are a forward-looking company, we got to be in this category of future. With this thought in mind and with good presence in the specialty segment, we thought that gives us the right to play. And so we have launched the range of monoclonal antibody products, which adalimumab, bevacizumab, trastuzumab, rituximab. All of these we have launched, and these products are being promoted to the right therapy segments. For example, rheumatology. We have got excellent traction there. We have got good promotional strategy because we are talking about biosimilarity, which is very important for us to educate doctors about biosimilarity, because doctors have so far been prescribing chemical drugs, and therefore to understand biosimilarity is also an important area, which is what we are trying to do. And with good relationship with the customer segments and good medical marketing focus and good expansion coverage strategy in these areas, I think it's giving us good traction. We also have a good presence in oncology. Therefore, products like rituximab, products like trastuzumab are finding good traction there. And as I said, we have forayed into the rheumatology segment, and that's where adalimumab and the rituximab is helping us there. So that gives us the right to play in this market.
Thank you very much.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Thanks very much for the opportunity and congratulations for a wonderful performance.
I'm sorry to interrupt, sir. Mr. Mehta, could you hold your phone a bit? The audio is not clear.
Sure. Is this better?
Yes, thank you. Please go ahead.
Okay. Yeah. So, congrats for a great performance. My question is actually in general on the domestic market, and not specifically for our company. But what do you see, the outlook on domestic market? I mean, despite COVID days last quarter, there has been so much growth in the market overall. Do you think this is sustainable? Do you think any new trend like trade generics is picking up? And if yes, then what's our strategy on that line? Thank you.
Okay. Thanks for the question. Now, if you see how the India pharma market is panning out since last 5-6 months, you would have seen that there was a sudden jump in the growth in the 2 months, April and May. Almost 40 to 50% was the growth, and that was largely because of the base effect. Then we saw that the acute was not performing well. It was chronic which was performing well. So acute had to pick up, given our demographics, given our patterns, given our health scenario, which picked up now. So and you would see now for the last 4 months the growths are stabilizing. In April, the growth was 51.5%. In May, it was 47.8%. And from June onward, we had 14%, 13%, 17%. And now, the last month, there was 12.4% growth. And in this 12.4% growth, if you see, there is some contribution of COVID-related therapy. So now one can observe the trend clearly that the growths are coming back to almost pre-COVID level. Pre-COVID, the growth is 8 to 9 to 10%. If you have 12% growth, out of which you remove around 1.5-2% growth coming from the COVID therapy, we are landing up at 9 to 10% growth level, and which is what was expected. That's what the market pattern is currently indicating to us. As far as we are concerned, we are staying put with our strategy. We are having wonderful iconic products in gastrointestinal therapy, which is Lomotil, Lomofin, Tricane, etc. On the pain side, we have Naproxen. On the neuropsychiatry side, we have Serenase, Haloperidol, and we have launched a range of MABs. On the nephro side, we have a range of the immunosuppressant and a good number of products in the dialysis range. I think we are well entrenched to make sure that we are able to maximize on the market potential available. Number one. Number two, our base is also relatively small. So we want to also make sure that we grow faster than the market and make up the lost time which we had in RPG Life Sciences. That's our strategy in the current segment. Our portfolio is very good. We are present in the right segment, and we are entering into the right segment, which is chronic and specialty, and that's what will help RPG Life Sciences going forward. In fact, the entire range of new products which we have planned are in these areas, so that we are able to have a wholesome opportunity maximization which is available to us in the pharma market today. I hope that answers your question.
Yes, sir. No, this is very helpful. Follow up on that, in fact. So you mentioned about new products which are likely to grow significantly. So, so far we have seen significant growth coming from our legacy brands. So, say 3, 4, or 5 years down the line, you see by way of the new products that are they likely to take over as the top brands that we have today in our portfolio? I mean, how do you see that? Because that's going to be the growth from here on, is what I understand.
Yeah,
the role of new products, especially in the next 4-5 years.
Yeah, I think the way we have strategized, we want to be strong in the chronic segment. We want to be stronger in the specialty segment, and that's where we are launching the products. And you would be happy to know that the initial results are quite promising. Today, whatever products we have launched in the last two years or so, they contribute 16% to our business today. 16% to our business, which is a testimony that we are moving in the right direction. And the new products, as I mentioned, are in the 3 areas. We have a lot of scope to grow even in our legacy products, where good number of life cycle management or line extension opportunities have been identified. We have identified as many as 20 plus line extension opportunities, and we have launched 6 line extensions in the last 7-8 quarters. So that will help us to grow our legacy products. And so the new products are concerned, We have lined up MAPs, we have lined up chronic products, we have lined up products in dermatology, high-end of gastroenterology areas. So I feel that going forward, the contribution of new products should be significant, alongside the existing products, which will also grow through our diligent lifecycle management strategy, which I just talked about.
Okay, great. Thank you very much. If I may please one last question, on the international market side, how many products are you likely to launch, especially I'm talking about the regulated markets. So, because there, the launch pipeline and the launch momentum has not been very strong. So, is that likely to improve from now on? What could be a number if you can give it in the new product launches in, say, Europe and other regulated markets? Thank you very much.
Okay. I think thanks for that question. Our drive to have new products, new customers, and new markets is continuing very strongly now in the international formulation business also. In the last half, if you see which has gone by, 22% of these international formulation business sales is coming from the new products. And these products are, as I mentioned earlier, is in line with three things when we look at the product expansion. One is we want to be strong in a niche area of immunosuppressant. So there are mycophenolate, there is a range of tacrolimus formulations which we are developing now, and we hope to take these products to the regulated markets, the markets of Europe and Australia, Canada, etc. That is with respect to immunosuppressant. We have Azoran already. We don't have mycophenolate and tacrolimus. That's where we are developing the products of complete range, and we are taking them in those markets. Number one. Number two, I mentioned that we will not launch any product where there's too much of competition. You know what's happening in the international market today. So what we have done is we have identified again we have a niche product. Either the product has to be complex generic, or the product must have some kind of special conditions to manufacture. And that's where sodium valproate complex generic comes in the picture. And that's where nicorandil comes into the picture. So these are the kind of the products which we are working on. We also having launched the prolonged release formulation, and we got the approval of a very tricky product called sodium valproate from UKMHR. Our R&D confidence has bolstered up. So this platform technology also we want to use it for other products going forward. So niche products, complex generic, and special condition. Number one. Second, immunosuppressant coverage of all the four molecules across the markets. And the third is the new product going forward, which are in line with the two specific which I mentioned. It will drive our business going forward. That's one driver of growth. Second driver of growth is that we have taken sodium valproate only to UK market. Now we work on Australia. We are taking these products to other markets also, so that we are able to maximize the R&D work which we see from these products going forward. That's our strategy going forward. Third, we are also looking at the markets like the developed markets like US, where we can we have our API available. We can do the tech transfer to US FDA-approved facility, and from there supplying our API to already a formulation marketer who has a presence in the US. We are identifying those areas also. There's a good amount of work happening in those areas also, so that we are able to be productive in the US market.
Yeah, okay. This is very encouraging. Thank you very much, and best of luck for the future.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good evening, sir. Congrats on a good performance for last couple of quarters. My first question is on could you talk about our capacity utilization currently, as well as our CapEx plan for this year and next year, and what kind of peak revenue we can achieve from the current capacity?
Okay. So, in terms of the capacities, I maintain, which I mentioned earlier, capacity would not be the constraint for the business expansion for sure. We have currently, if I take my current capacities of in the API plant and the formulation plant, we are on the two-shift working, on all the days working as per the industry practice. We have a current capacity utilization is only to the tune of 50% in the API. And similar situation is there in the Ankleshwar formulation plant. If I take the 6 days working, 2 shifts working, I have a capacity utilization currently about 38-40%. Of course, currently we are not running the second shift, we are running the first shift, and with the first shift, it is close to about 70-odd% in the formulation plant. That's on the tablet side. There are significant capacities available both for the liquids and the capsules in the Ankleshwar plant for us. So as I mentioned, that's not going to be constrained going forward. In fact, what we've done is now that we work on getting the business first, and then we look at the expansion, the capacity which is required. That helps us to be targeted expansion, and that also helps us for good capacity utilization. In fact, the last year, a couple of new opportunities and new customers which we got, we followed that strategy, and that is also helping us to make sure that the money spent on CapEx is fully utilized. So that's our strategy, and therefore the CapEx allocation is not a constraint at all, and will not be the constraint going forward. That much I can assure you. Hope that answers your question.
Yeah, that is helpful. Second question is on the volume growth side. So H1 we did a double-digit volume growth. So do you think we can repeat this performance in H2 and say in FY23 with the new products coming in?
Yeah, I have always maintained that we will strive to beat the market growth. Our growth should be higher than the market growth, and that's what the whole team is working towards. And that would be through new products as well as the legacy products, as well as expansion in our international formulation business. That's what we are working towards.
Sure, sir. The next question is on the API contribution part. So this segment has started to grow for us. So going forward, do you think this can become a 100-150 crore segment for us on an annualized basis?
Yes. Yeah. The API, as I mentioned, is also doing well, and we have plans for a few new products in the API segment. We have also plans to look at the capacities expansion also, or plant upgradation also. That these are the thoughts which are there with us going forward. And API will also contribute with, yes, what you mentioned, the numbers, we are targeting those numbers that you mentioned.
Sure, sir. Final question is on the chronic and specialty side. So, sir, as of now, could you talk about the contribution of these two segments and what are our targets? And because as far as I can see, we have MABs and Gliptins, specialty and chronic. So any other products we are targeting, or do you think for next 2-3 years, these 2-3 categories can take us to the next growth level?
Yeah. Actually, because you said it yourself, the focus is on chronic. Our presence in chronic is very limited now, and we have significant opportunities available in the CDM segment. Of course, it is tough because there are well-entrenched players already in the market, so it will be a bit slower game, but I'm sure it is going to be a longer lasting game for us So that's on the cardiovascular. We have a good number of products identified, both in the cardiovascular as well as diabetes or metabolic disorder area, which we are executing now. In fact, we have the new products lined up for the next 3 years, which we are executing now. So I feel chronic would contribute significantly, though it will be a little slow to start because of the competitive nature of the market. Second is the specialties. I think there is very good opportunity available to us in the specialty segment, since we acted a bit smartly because we forayed into rheumatology, because rheumatologists prescribe our immunosuppressant basket also. Plus, we launched rheumatology-specific products like adalimumab and rituximab. And we now launched a JAK inhibitor called tocilizumab. And that has helped us to have a good traction in the rheumatology segment, which we just entered a couple of years back. And same is true for gastroenterology. There again, the immunosuppressant basket has a good scope to prescription, and then we can launch some gastro-specific products also. They're particularly the high-end ones. And going forward, the plan is similar plan exists for dermatology, because dermatology also has a good support for immunosuppressant. Plus, we launch some high-end derma products going forward. But that's the plan going forward in the next 3-4 years as we go along. And that's what should help us to continue our growth journey going forward.
Could you talk about the rough mix we are targeting between specialty, chronic, and our life cycle management products for the immunosuppressant basket 3 years hence?
3 years hence, I hope we should be able to reach somewhere 60-40 or 45-55, with 55 or 60 coming from the mass products and the remaining coming from the specialties. Currently, it's 2/3.
Yeah. That is very helpful. Thank you for answering all the questions.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. Ladies and gentlemen, if you have a question, you may enter star and 1. As there are no further questions from participants, I hand the conference over to the management for closing comments. Please go ahead, sir.
Let me thank everyone for taking time off and attending this earnings call. I'm deeply impacted and hope to see you in our next earnings call. Thank you so much. And as I say bye to you, I wish happy Diwali and a great festive season ahead. And I also wish that we get fully vaccinated soon so that we all can resume our pre-COVID life ASAP. So thank you very much for all your support and being here and asking questions. Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.